Good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Thank you for joining us. Well, the National Assembly has approved the sum of 982.729 billion naira as supplementary budget for the 2021 fiscal year. The approved sum represents an upward review of 86.9 billion naira from the initial amount of 895.842 billion transmitted to the National Assembly by President Muhammadu Buhari about 2 weeks ago. The passage of the Supplementary Appropriation Bill 2021 follows the consideration of a report by the Committee on Appropriation during Wednesday's plenary session. Let's take a listen.
More funding is coming the way of security agencies to confront the persistent security problems ravaging the country, as the National Assembly is passing a supplementary budget which is expected to see an upward review of the funding of some security agencies which were grossly underfunded or not funded in the appropriation bill. The National Assembly is approving the sum of 982.729 billion naira as supplementary budget, out of which 123 billion is for recurrent expenditure and 859 billion as contribution to the Development Fund for capital expenditure.
This House do consider the report of Committee on Appropriations for a bill for an act to authorize the issue of Consolidated Revenue Fund of the Federation for the sum of 982,729,695,343 naira only.
The Minister of Finance, Zainab Ahmed, had disclosed to the Senate Committee on Army that the federal government spent about 54 billion naira in funding operations of the Nigerian Army between 2019 and 2021. Senate President Ahmed Lawan is asking the security-focused committees to ensure proper oversight of the deployment of the funds.
We expect our committees, the relevant committees, to be stiff, to be alive to their responsibilities for oversighting on how these funds will be deployed prudently.
The Senate is also approving President Buhari's request for the authorization of 2.343 trillion naira as external borrowing in the 2021 Appropriation Act, which would be used to fund specific capital projects from priority sectors of the economy. The approval by the upper chamber follows the consideration of a report by the Committee on Local and Foreign Debt and is coming amidst concerns about the country's rising debt profile.
The committee also knows that due to shortfall in our annual revenue in relation to our needs for rapid infrastructure and human capital development, we have had to pass deficit budget every year, requiring us to borrow to finance the deficit in our budget.
The new borrowing was calculated at an exchange rate of 379 naira to $1 and is expected to be sourced through the issuance of Eurobond in the international capital markets. Linda Akibi, Channels Television News.
Meanwhile, the Federal Executive Council has authorized funding of a 5.62 trillion naira 2022 budget deficit with extra foreign and domestic borrowings. Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed, made the disclosure after the council meeting presided over by President Muhammadu Buhari. Do take a listen.
The Federal Executive Council meeting, chaired by President Muhammadu Buhari, considered and approved several memos, including the 2022 to 2024 medium-term expenditure. The Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed, reveals that the Council ratified additional borrowings to fund the 5.26 trillion naira budget.
This budget is just 3% higher than the 2021 budget in terms of the size of expenditure. The budget deficit that is projected for 2022 is 5.62 trillion, up from 5.60 trillion in 2022. This amount represents 3.05% of the estimated GDP, which is slightly above the 3% threshold that is specified in the Fiscal Responsibility Act. The FRA empowers Mr. President to exceed the threshold if, in his opinion, the nation faces national security threats, and it is our opinion and FEC agreed. The deficit is going to be financed by new foreign borrowing and domestic borrowing, both domestic and foreign, in the sum of 4.89 trillion, and privatization proceeds of 90.73 billion, and drawdowns from existing project-tied loans of 635 billion.
By the same token, the Council approves over 16 billion naira for ecological fund projects across 12 states and the FCT.
Erosion, flow control, and environmental degradation at Agai and Lapai communities in Niger State. And finally, soil erosion, river channelization, and slope protection within Maitama district.
The Minister of Works and Housing clarifies that his ministry has completed construction of 5,000 kilometers of roads out of 13,000 under 859 contracts.
Now, aside the approvals, the federal government appears more optimistic than ever, given that inflation rate is dwindling down to 17.92%, while the nation's revenue is projected to increase to over 9 trillion naira by 2023. From the presidential villa, Gloria Umezuke, Channels Television News.
Well, one issue that has continued to dominate the global space has been concerns over climate change. While the world has been moving rapidly towards clean and renewable energy, there are concerns as to what the implications will be on fossil fuel-dependent countries. The Managing Director, Codros Assets Management, Bolaho Aino, joins us now to weigh into this. Good morning, Bolaho. Thank you very much for joining us. Well, Bolaho, recently, OPEC Secretary General Mohammed Bakindo cautioned against the discontinuation of investment in the oil industry and reiterated that oil and gas have an important role to play in the energy transition. What do you make of this statement?
Okay, so I think it's quite a valid statement, to be quite honest. And really what he said was that really it's not really against net zero emission, but he feels that really not throwing the baby away with bad water. And while we are all pushing for net zero emission, while we're pushing for cleaner energy, he's saying that you shouldn't just ignore development in the oil sector. And that's quite understandable because of the importance that oil has in major economies around the world. Nigeria, for instance, we know that oil really accounts for 80% of our revenue, and Nigeria is not really left alone in this boat. So his point is quite noted, and I think for me the salient point is for Nigeria as a country, we need to start thinking of how do we diversify our energy base. And most economies around the world, they are saying by 2050, which is about 30 years from now, we want to achieve a net zero emission. And that means they are moving from fossil fuel to other alternatives. And it just go without saying that we need to prepare for this. For most disruptions, most times people are not aware. Sometimes you see a viable institution, a viable country is no longer viable when you have disruption. But this disruption is quite known. Most countries are applying towards it. And I think Nigeria also needs to start having a plan towards diversifying our energy base. So not totally just shifting away from oil, but also trying to just focus on other alternatives, other innovative ways to reduce carbon emission and to ensure that we can have clean energy and also good production. So I think it's quite apt what he said, and I really want to toe the line of what he said. I think there's something significant as well, that that's just looking away from oil can have significant impact, especially for the underdeveloped nation. Most of the developed nation guided to 2050, but most of them said that by 2050 they might not be able to achieve that net zero emission. And he's saying for the underdeveloped nation, which Nigeria also can fall in place, we just need to tragically just position ourselves. So I think what he said is quite apt and quite valid.
All right, Bola, please just look into your crystal ball and tell me, where do you see this industry in another 30 years?
Okay, 30 years is really a long time from today. And really the energy industry or the oil and gas industry has gone through a lot of transition. I think in 30 years' time, there's going to be a lot of significant change in composition in terms of carbon, in terms of population, in terms of economic growth. I think demand is going to flatten a lot and then reduce, mainly due to efficiencies in the use of energy after 2030. most people have really proposed that by 2033, we're going to see gas begin to have a leading role. So a lot of things are going to change. I think it's going to really flatten, and that's why I said that Nigeria needs to begin to position in ourselves for this change. I think key areas of demand for fossil fuel will be for heavy transportation and air and shipping. And like I did say, gas is projected to become the largest energy carrier from 2023. In terms of the oil composition, I think hydrocarbon is just probably going to have just about 30% going forward. And very important, well, I don't have a crystal ball, but if the events of the past are anything to go by, I think there's going to be a shift in focus from fossil fuel or from hydrocarbon more to gas.
Yeah. Well, you say you don't have a crystal ball, but then bring it down to Nigeria, which relies so much on oil for its revenue. Where is the risk off and risk on?
Okay. And if we go back to what the OPEC Secretary General said, countries trying to achieve net zero emission. And I think for Nigeria as a country, we need to really position ourselves. That means come 30 years from today, most countries, developed ones, are going to shift away from fossil fuel. And Nigeria, at the moment, we are heavily dependent on fossil fuel for our revenue. Also in terms of our energy production, is majorly fossil fuel. So I think we just need to begin to position ourselves, if we want to remain that oil giant that we are, or that giant of Africa that we are, we need to really position ourselves and diversify our energy base and not just solely rely on fossil fuel. We need to look for alternative ways or better ways of generating energy, clean energy, that's not going to cause emission, because that's where the world is moving to. I want to be prepared as a nation. And it's quite instructive because Nigeria, our revenue is really linked to oil receipts. When oil is good, Nigeria is fine. When oil is good, our national reserve is fine. And we saw what happened last year when we had the COVID-19 pandemic, with oil coming to record lows. That really affected our revenue. And just imagine if we don't have oil anymore. So we need to begin to prepare for this. And I think it's a major risk factor. And I believe the economic watchers are putting up structures to ensure that this disruption doesn't affect us as a nation.
Yeah, and a couple of countries have a life after oil fund. How's Nigeria doing on that front?
Well, not so much I've been heard about that. Like I said, we are so much heavily dependent on oil. And I think we just consciously need to begin to look away from oil. Yes, oil has been good for us. We had the oil boom. It's revolutionized us as a country. But really, the world is shifting away from oil. And I think that needs to be the message that needs to sink in. If there was anything that the Secretary General said, which was what I got from the message, is that come 30 years from today, most countries are not going to be dependent on oil anymore. And I think as a nation, we just need to take those messages very serious and just begin to prepare ourselves for that disruption. It's an inevitable disruption. For most disruption, really, you're not prepared for it. But this one is as if you are really forewarned. And since everybody expects it to come, I think we just need to begin to prepare for it. And we are not disadvantaged.
Now, since the beginning of the year to date, Nigeria's financial market has been quite volatile. The fixed income instrument yields rising significantly from 2020 lows and are currently around their peak levels. And recently, the equities market has started to see buying interest from investors, while Eurobond yields are also attractive at their current level. Are there some linkages to what is happening in the global oil market?
Yes, I quite believe so. And most investors always appraise the risk on Nigeria in terms of oil. If oil is good, for instance, the risk in Nigeria is muted. And because, like I just said, about 80% of our revenue comes from oil. In terms of accretion to reserve as well, it grows significantly when oil prices is trading at significant high level. So now oil is about $73 per barrel. That is good for Nigeria. We're able to earn additional revenue to our reserve. And that also affects in terms of what we can do from a budget perspective. And you know, the way people look at the equity market is usually like a barometer for the economy. So if we have good results, if we have good macro story, most people want to invest in the equity markets. And we've seen some people begin to come back to the equity markets. Also, what that does in fixed income space as well is that if the reserves are quite stable, you don't expect to see a lot of FPIs leaving the country. So we expect to see significant inflow in the equity markets from the FPIs and also in the fixed income market as well. So really, there's a significant linkage, like you said, if I'm to answer your question, between oil price and the equity market and the fixed income market. Most investors always appraise Nigeria in terms of oil, and it's because oil accounts for most of our revenue.
And do you think this is a good time, for investing in these markets? And, how should investors optimize their returns in 2021?
Okay, I believe it's always a good time to invest every time. Really, the question is, do I invest or I don't invest? So investment is always a good thing to do. The question is, what do I invest or how do I invest? And I think there are significant opportunities. Like you said, we began to see some rally in the equity markets. I believe a lot of investors are going to start positioning for Q2 dividend. So for stocks that have good fundamentals that we expect to get interim dividend in Q2, that might be somewhere investors can pick their tent. Also for the fixed income asset class, for instance, we feel that yields have reached an inflection point. Over the past couple of weeks, we've seen yields begin to reduce. So for investors thinking of capital preservation, you might begin to lengthen your duration, and that means you are going at the long end of the curve in your money markets or your treasury bills or your bond instrument, because we expect yields to have peaked. So like I said, it's always a good time to invest, and the question is really, what do I invest in? So for equity markets, look for stocks that are going to pay dividend. We expect some banking stocks to pay dividend in Q2. We're going to start seeing their results in July. Like fixed income instrument, we've seen a lot of commercial papers that have come out of recent time, and some of those commercial papers are strong double digits, some as high as 14%. And money market mutual fund as well is also a good alternative for investors that are looking at capital preservation. Yields on money market mutual funds from last year that was trading about 0 to 1% are moving towards 8, 9, 10% now. So really the opportunities for any sort of investment.
Well, it's just about looking for a good asset to invest in there, not necessarily buying the dip. Okay, recently, Codros released its half-year outlook report titled Navigating the Uneven Path of Recovery. And the report highlighted major economic issues amid the COVID-19 impact and the shortage of vaccines in the country. The report also gives a positive outlook for both the equities and fixed income market for the rest of the year. What factors do you think would shape the performance of both markets?
Okay. So really, we've seen a lot of activities after the relaxation of lockdown, and that has caused some sort of the economy to be stimulated. We expect to see a lot of prospect for macroeconomic condition going forward. That's probably going to support earnings of the corporates that are listed on the exchange. And of course, better earnings also means better return for the investors. We expect possible returns of the FPIs into our markets. The FPIs, they've been net sellers of equities in the past, but if they come back to the markets, that's going to also support activities in the equity market and the fixed income market. We had recently, yesterday, that the Senate approved the federal government borrowing plan, about 6.2 billion in euro bonds. That is probably going to help or show up our reserve as well. And that might give some FPIs some confidence that they need, and might see them come back to the markets. I did mention that we expect some stock to pay interim dividend in Q2. For a lot of investors that like dividend, for instance, might see some of them begin to pay their tent in those equities, in those stocks. So dividend payments, we expect to support activities, and we also expect some company-specific activities. GTB announced their holding structure. That might elicit some interest in GTB, for instance. Might possibly see a second buyback of Dangote share. They did a buyback last year. Might see the second tranche this year as well. So those are key activities that I think might spur activities in the equity markets. In the fixed income space, like I did mention, that we feel that yield has peaked, and for a lot of investors, we saw a bit of bullishness in the past couple of weeks, in the last 2-3 weeks to be precise. A lot of the PFAs are coming back into the markets because the free yields have peaked, and that might also support activities in the fixed income space as well. I think if the Eurobond issuance is successful, might see a lot of FPIs come into not just the equity market and the fixed income market as well. So all those activities we think will spur performance in the equity market and the fixed income markets going forward.
All right. Well, we'll keep tracking these markets. Thank you so much. We'll have to leave it there. Bola, as the Managing Director, Codros Asset Management. Thank you so much for your time.
Thank you for having me.
All right. Business Morning continues in a moment. Do stay with us.
Oil prices fell for a third day this morning amid anxiety that supply may rise after the collapse of this week's talks among major producers, potentially causing the current output agreement to be abandoned. Brent crude oil futures were down 43 cents at $73 a barrel. U.S. West Texas Intermediate futures were down 51 cents at $71.69 a barrel. Brent prices have fallen about 5.3% since Monday's close after talks between the Organization of the Petroleum Exporting Countries and its allies, including Russia, known as OPEC Plus, fell apart when the de facto leader, Saudi Arabia, refused demands from the United Arab Emirates to raise its output under the group's supply cut agreement. Okay, joining us now on Commodities Market Update is Juliet Adenuga, Head of Treasury at Financial Derivatives Company. Thank you very much for joining us, Juliet. Good to see you.
Thank you for having me.
Morning.
So, aside from the OPEC Plus dispute, concerns over the coronavirus is also weighing, on oil prices. What do you analysts make of these recent developments on the global oil market?
Okay, the first thing we should try and understand is the nature of the trade-off between UAE and Saudi Arabia. That is just the main, reason for the recent downward trend in the price of oil, because UAE wants to be given more opportunity to produce more. Their baseline is, to them, they've put in a lot of dollars, billions of dollars in increasing their capacity, output capacity. Now they are asking for the baseline to be more than what was agreed on when they started the agreement, the OPEC Plus agreement of 2020. And they have good reasons for that, because they named some other countries that had come up and asked for an increase in quota, like Nigeria. Absolutely. Kuwait is there, Kazakhstan is there. Some countries have also done the same thing, and they were given that, that leverage. And now if they don't have, it's going to affect their own, not only their revenue, it's going to leave them at about over 1 million barrels in reserve because of, the capacity. That is what is bringing the kind of, disagreement that they were not able to resolve. And I also want us to understand the fact that it's even beyond this oil issue between UAE and Saudi Arabia, because it's like UAE is trying to just come out of that shadow of Saudi Arabia and begin to chart their own, course in terms of economic affairs and political issues. So, but, Saudi Arabia is not taking it lightly with them, because Saudi is actually the de facto leader. Apart from that, they are the price givers. They produce about 10% of global, total production, of crude. Now, the issue is, how do we make of this? We cannot really say, this is how it's going to go, because it's just in the initial stage. Yeah. We can't say this is the end of OPEC. Everybody will just, to become a free-for-all.
But some are anticipating that perhaps UAE might actually, break out.
But, talks are still, even though they've not agreed on the next meeting day, I know that Russia had waded in, and they are doing some, kind of trying to deliberate and talk about it. Because in the long run, if everybody just goes away, it might not be beneficial in the long run, because it's going to bring a crash in crude price.
All right, but we've seen the price above $70, despite the rise in, oil prices. But Nigeria's foreign exchange reserves has continued, that downward trend. What's responsible for it?
Yes, people usually want to know. Even 2 years ago, when there was a crash in oil price, we're always saying the same thing, that our reserves are going down. The Naira is, is unfavorable, the exchange rates. People are wondering, why is it even now that the price, it's almost 100% increase from our benchmark?
You work in the Treasury office, you should be able to tell us.
Yes, I'm going to tell you. The issue is that when we talk about foreign reserve as a country, it's not just our earnings from crude. Remittances from diasporans are part of our earning, our forex, when we talk of foreign reserves. Things like, apart from the remittances, we also have FPI, foreign private investments, that come in various forms. Now, we know what happened after the COVID and the crash. People started taking back. In short, CBN had to, over and over. I'm not sure they are through with the backlog in terms of returning back those investments made by people. So that had depleted our foreign exchange reserve. Then remittance dropped by 28% too. Pulling, there's like a back way. As we are getting the increase, the benefit of increased revenue from the barrel price of oil, these other outlets doesn't allow us have, they do not allow us have that effect it should have on the Naira, because we're still lacking to be able to meet. And then our import, bill is not getting better. With so much, just from what of things I discovered, it's increased by about 54%, going to close to 7 trillion. We are expected to, spend this year. And when you look at the basket, what is there? Agricultural produce, oil produce, things like solid mineral. You look at manufactured products. It's not as if it's anything capital that is going to create job or bring about wealth, wealth. So these are the issues that we have to face. Yes.
Right, but then the National Assembly has just approved some kind of borrowing plan for the federal government. How do you see this helping to shore up, the reserves? It's not a new. It was there in the appropriation bill. It's just that it's now time to draw down. It's been there. The provision has been made, but it's just like it's time now. Draw down and begin to use this. But the issue is not that we are borrowing, but what we are using the borrowing to do. Like we know the debt servicing to revenue is on about 94% presently. If you now want to add things like overhead, recurrent expenditure, it will be going far above 100%. So it's like we're living a borrowed kind of life. Or most of our expenditures are done from borrowing. That is not what the main issue is. The main issue is now, what are we going to use these funds to do? Is it still going to be just recurrent expenditures that do not bring about any increase in terms of wealth creation, or like, say, the real sector having an impact that will now trickle down to create things like employment or improve the health sector or the education sector? If it is still that we are borrowing to fund such recurrent expenditures, which is usually the main bulk of our appropriation bill and budget, then I don't think it's going to be much beneficial to us.
Servicing other debts.
We keep servicing debt, and not only will we affect this generation, even the unborn generation are at a risk because of what is happening.
All right, so one of our major challenges in Nigeria as an oil producing is, exporting was an inability to refine, the products. But now NNPC says Nigeria will start, exporting refined petroleum products by 2023. How feasible is this?
I know. I think that they made that, they projected that definitely based on the Dangote refinery.
Okay.
That's one. Because Dangote refinery was supposed to have kicked off this year. The projection is that max, first quarter of 2022, they would have started production. Dangote refinery is the largest single train refinery globally, because they can be able to refine 650,000 barrels a day. Now, our consumption as a nation is on about 522,000.
Yeah.
You can see that there is a kind of overage already of about 130,000 barrels per day. Now, apart from that, there's been an approval for 1.5 billion naira to be put into the rehabilitation of the Port Harcourt refinery. So if we're able to get, the Dangote refinery working, then the Port Harcourt or other refineries, kick off, we're going to definitely begin to see that first will meet local demand. Then the excess will now be exported, and we'll begin to see saving what we've been using to. I told you that the import bill is so high. In short, CBN is targeting a reduction by 35%, and I know it's based on all these things that they are looking at how to cut down, especially on oil. Oil-related products cost about 19% of the whole thing. Is so high. But if we can be able to get the Dangote running with other refineries, we're going to see a situation whereby not only are we going to stop that leakage in terms of, forex to buy, refined products, we'll begin to export and earn
Absolutely.
And when we begin to export our end, other things will flow, like investors' confidence, you know, more of forex will flow to our end, and we begin to have a favorable balance of, you know,
we all
of
look
trade.
forward to, you know, seeing this come to, you know, reality. So one thing is to talk about it, another is for it to actually, you know, happen.
But you know that implementation had always been the issue.
That's the problem.
Yeah. Implementation is not policies. Policies.
Yeah, we always have good
we
policies
have
here.
Good ideas and all.
Yes, so just hope that this time around we'll eventually get it right. Okay, let's look at agri-commodities now. Nigeria's wheat import climbs by 47.4%. Okay, so what's the implication of this? Yeah. We're talking about wheat import, of course, and we're talking about our import bills.
Yes, because we most of the, you know, staple, you know, confectionaries like bread and all those snacks are from wheat. And I don't see, people don't think of cutting on those things, even though the prices increase or the weights, you know, but people keep demanding. So the producers keep, you know, having to, you know, demand for more or maybe import more. It goes up, and that is one challenge that is transferred back to consumers, because the cost of producing all those, you know, wheat-based produce, it's gone up because of the cost of wheat. Now, with wheat import increasing, that means there are other issues, because substitutes became more expensive. Instead of people having to wait to buy gari, it have become so expensive that a bag is tending towards 18–19%. Yeah. They look for alternatives like the wheat in the flour from Semo and other wheat flour
has also increased.
Because they become cheaper relatively to things like gari. They had to, you know, begin to import more in order to meet up the demand. So it continues that way, and it's not going to stop, or else the substitute like gari begins to drop. And we know because of the shortage that comes with, you know, the planting season, we're not about to see a change in the price of gari now. Maybe later in the day during harvest, that's when we might begin to see a drop, and then it will begin to affect the demand for wheat also in the country.
Right. All right. Okay, so take us through the domestic price movement for the week and the major drivers.
Okay, for the week, presently there was basically some drop in some particular products. We noticed that the rice decreased a little bit, paddy rice to 21,000 naira, you know, a bag. It was at 27 the last one. There was also a reduction in sugar by about 1.54% to 17.87. Then also others decreased a little bit, like the sorghum, as well as a bushel of cocoa. A reduction. We know that cocoa for some time now, it didn't benefit it didn't enjoy the benefits, the price rally benefits of what happened with other commodities because of the demand for, you know, products like chocolate. I don't think people now, that's not the concern of people, things like chocolate and all those things. So it's affected it, and then it also affects the earning. So basically, other things, there was a reduction in prices of cement is still, although there's a little increase in the price of cement recently. And then also other things like tomatoes is still not, you know, anywhere getting better. It's still high. Onions is still, you know, relatively expensive. Things like even yam.
And yet, Nigeria is celebrating inflation is declining. Well, unquote. Anyway, thank you very much, Juliet. It's been a wonderful time with you. We do appreciate it.
Thank you so much.
Thank you for having me.
Right. Okay, now for the opening calls to the market, we have Anete Edit. Anete, more gains there.
Well, good morning, Chimi. Yeah, before we talk about the gains which was in the other side of the market, which is the equities market, but this time we need to start with the fixed income markets first. And then, of course, it was a bearish, it's still bearish, not much of activity there. Take a look. The FGM bonds, 9 deals on the 24th of July 2045. And of course, this comes as the average yield expanded at the short and the middle end of the curve. So of course, it's as if maybe investors are kind of trying to move away from the fixed income market at the moment, because within the last 3 sessions this week, we've not had much of activity there. We had just about 24 deals there, worth about 22.85 billion naira. Over to the Treasury bills market. not much of activity there, just 4 deals for the demand for the 30th of June 2022, just 4 deals there. Total value of deals there, just about 5. For the central bank's special bills, not much of activity. Still on the 30th of August 2021, still the same thing, not much, although it's a little bit increased in contrast to the previous day. 11 deals there, worth about 48.72 billion naira. For the almost special, for the open market operations, we expect that there should be some, central banks intervention at the open market. Maybe there's going to be a mop-up, but we needed to talk to an analyst there, Kaya Webby. I don't know if maybe we have him over there at the market. But okay, sorry. Do we have Kaya? Okay. Okay. Good morning, Kaya.
Thanks for having me.
Hello. Good morning, Kaya.
Good morning. Yeah.
Okay. Yeah. Thank you for joining us. Yeah. Now we've seen the fixed income market, in particular the bonds and the treasury bills markets. Not much of activity there. And of course, it looks as if it's been silent. Can you bring us up to speed, especially as regards some open market operations, the treasury bills auction for today, Thursday, and then other activities there?
Okay. The treasury bills secondary market was relatively quiet yesterday. Few trades were recorded across the board, and rates remained unchanged on both the OMO and Nigerian Treasury Bill segment. There was a 136 billion OMO repayment on Tuesday, and as a result, the CBN is floating an OMO auction today with a total of 20 billion offered across the 110 days, 180 days, and 227 days maturity. We expect the stop rates to be maintained across board. The FGN bond secondary market traded on a bearish note yesterday, with short to mid-dated papers ticking slightly upward. We expect to see more demand in that segment going into next week in view of the July 2021 maturity of about 561 billion that would hit the system next week. The DMO released the FGN bond issuance calendar for the third quarter of the year yesterday, indicating plans to raise about 450 to 540 billion to fund the budget deficit. The 2028, 2036, and 2050s will be reopened with 50 to 60 billion offered on each at the monthly auction. So we expect the market to take position ahead of the next bond auction in view of the new auction calendar.
Okay, so thank you, Kay, for bringing us up to speed. So we'll keep tabs on that auction as the days proceed. Okay, so now let's flip over to the equities market. It's still positive. That's just the watchword for it, and it's still trying to regain their, regain its balance after the market lost about 1.3 trillion naira in the first 6 months of this year. 0.21%, or but just call it 0.22% if you do by approximation, and more than 43 billion naira was what investors gained in Wednesday's transactions there. Volume of for the sectoral, it was all green across board. Investors' interest for the shares of Access Bank, Zenith Bank, GSK, that was all what lifted the market yesterday. Then if you take a look at volume of transactions there, was nearly 300 million units, which was an increase to the previous day's transactions. Value was also increased, but the number of deals was slightly lower in contrast to what we had the previous day. Then, of course, we also had the unlisted securities market, which was lower. But before we go to that, let's join Afolabi Benro, who's a stock trader at Stanbic IBTC Brokers. Good morning, Afolabi.
Good morning, Thank you for having me.
Okay. So now, we've still been able to maintain a positive trend there after crossing back to the 20 trillion naira mark in market capitalization, as well as the 38,000 level in the NGX All-Share Index. So now, is it that foreign investors are the main drivers for this market, or is it the local investors, or can you give us more updates on this the market's bullish trend?
Okay, so foreign investors have actually been quiet over the past couple of months. Most of the transactions we're seeing from foreign investors are on the sell side. It's mostly been local investors that have been driving activities. Yesterday, we saw local investors drive activities in the banks, especially in the likes of Access, First Bank, Fidelity, and Zenith Bank, and that's what pushed the prices up.
Okay, so now with that being said, we have just one more day, or let's just call it a day and a half. Today's they're still trading. Trading is still in session right now. Although I would have loved to have you give us updates on how the market is performing, and then what you expect. How do you expect it to go into Friday session?
Cool. So it's been a quiet start so far. Although in some of the names that we saw gains yesterday, the likes of Access, they started to see some profit taking setting. Access is around 9.20 kobo as we speak now. We expect to continue to see that going into the rest of the session. Leading up into Friday, we expect things to be quiet outside of prearranged block transactions.
Okay. So thank you, Afolabi. We'll continue to keep tabs on our positive stock market. So that was Afolabi Benro, who's a stockbroker at Stanbic IBTC Stockbrokers. So now that's just all we have for the market. I don't know if we have much time, but I think for me, we still have to keep
all fingers crossed.
Yes, well, let's keep our fingers crossed.
Right. Okay, we take another quick break, and when we come back, we do an opening call to London. Just stay with us. All right, let's bring in Juliana now for updates from the Street of London. Good morning, Juliana. Prime Minister Boris Johnson is calling for a review of the purchase of the UK's largest producer of semiconductors by a Chinese-owned manufacturer. How do you see this affecting UK-China relations?
Well, it's pretty a normal thing to do, especially because at the moment the semiconductor industry, as it pertains to chips, is going through some sort of shortage, especially with China. Some of the sanctions that were put in place under Donald Trump's administration means it's been difficult for the country to get a hold of these chips, and they have identified the semiconductor industry as a key component to its technological evolution. This is a huge issue. We did hear previously from the Business Secretary, Kwasi Kwarteng, that they were going to have a look at the takeover of Newfoot Wafer Fab by Nexperion. They are Dutch-based, but they are solely owned by China. The deal is expected to be to the tune of about £63 million. And now Prime Minister Boris Johnson yesterday, during a select committee hearing, did confirm that the National Security Advisor will be looking into this. The global chip shortage has been a massive topic of discussion geopolitically over the past few months, particularly during the pandemic, where loads of people have obviously been relying on technology. So we'll just have to wait an update to see whether or not the deal will go through. But we did hear from the Welsh Secretary yesterday, who seemed to be pretty happy with this deal. But of course, the Prime Minister will have the final say on this.
And the OECD says Britain's jobs recovery could be delayed until the end of 2023 as thousands of workers struggle to find employment. Now, how are the authorities mulling this report?
Well, this is an annual report that the OECD, the Paris-backed organisation, does release every year. But of course, because of the horrible year that we've all had, people have been taking this a lot more seriously. They've been looking at underemployment and unemployment around the 38 richest countries in the world. And they have said that Britain is likely to suffer more. I think they said that with most countries, they expect the labour market to fully recover in between Q1 and Q2 of of 2023. In the UK, it's going to be much later. At the moment, unemployment figures in the UK are pretty much okay if you compare it internationally, hovering around that 4.8% mark. But we still got over 2 million people, according to the Office for National Statistics, relying on the government's furlough scheme, which will wind down at the end of September. The Bank of England governor has already warned that unemployment will peak by that time. And so at the moment, it's almost a wait and see game, because we don't know just how many of those furloughed jobs are going to recover. And if they don't, then we could be seeing unemployment peak at about 8% towards the end of the year.
All right, we'll talk to you again by 1:30 on Business Incorporated, Juliana.
Thank you.
And now to the crypto market. Ladi, what's happening there?
Well, Chimi, word on the street is Bitcoin is on the cusp of a big move right now. But the question is, what direction? Is it up or down?
Tell me.
This morning, it's red. We have Bitcoin in the red, Ethereum, and major altcoins. Only the stable coins and the green and Theta at this moment. Market cap, $1.40 trillion, is down 4.79%. 24-hour volume, $77.04 billion traded in the total crypto market at 8 a.m. this morning, down 4%. And we have Bitcoin dominance at 44.38%. Look at the price of Bitcoin, $33,145, down about 4%. And 24-hour volume for Bitcoin, $26.08 billion traded in Bitcoin this morning. Look at that 4-hour chart there. We see it's broken down the lower Bollinger Band. Volume is sapping out. And we have that bearish MACD cross. And the RSI oversold at 8 a.m. this morning on the 4-hour chart. Price of Ethereum, $2,218, down 6.86%. But everybody's still quite bullish on Ethereum. They are seeing Ethereum hit as high as $10,000 later this year. But who knows if that's going to happen. 24-hour volume, $22.06 billion traded in Ethereum. Let's bring in Rume Ofi now, digital market analyst. Hello, Rume.
Good morning, Ladi.
Hello, Rume.
Hello, Ladi. Good morning.
Good morning, Rume. Great to have you. Well, I saw a headline of Visa saying that crypto-linked card usage for the first half of 2021 hit about $1 billion. What does that mean?
I think I have to explain a lot of things to the audience here, because this is a very, like I always say, this is the best to be alive, and I think a whole lot of people need to benefit, most especially through the knowledge and your platform. Visa is the world leader in digital payments. That is, the process transactions globally, right? So, and they've come out to say they are partnering with about 50 leading crypto platforms in the world for card programs. What are card programs? Card programs are programs where all of these exchange platforms or all of these crypto platforms say that, oh, you can fund your wallet with crypto. Then we give you a card that is in partner with Visa, and with that card you can spend the money anywhere in the world. And the truth is, with just making conversions of crypto, and you spend your cash anywhere in the world. And it's so amazing with the fact that Visa has about 70 million merchants all around the world. So them coming to say they made $1 billion, I think this is just a starting point. And the world should begin to see where crypto is headed. This shows that the world is beginning to see value in crypto. So all of these exchange platforms, most especially the bigger ones, FTX, Crypto.com, Coinbase, they are leading the way, because it's no knowledge anymore. You know, the common knowledge now is that crypto is actually changing itself in a way that is going to be very attractive. And these are actually processed. It's about 65,000 transactions in seconds. So all you just need to do is just plug your portal with crypto, either Bitcoin, Ethereum, or any other, and it's converted. This is what has been implemented in this part of the world. But, you know, we have issues with regulation, which we are still fixing. I pray we get this really worked out, because the world is fast moving, and most especially in the U.S., they are making a lot of all of these things go really fast, and their companies are benefiting. We should be able to implement this. I know some very young Nigerians that have actually implemented this, but because of the ban on cryptocurrency, all of their business have crumbled. So these monies now, for example, if I'm having Visa, and funded it with my Coinbase account also, doing all of those tax programs. I am actually paying Visa, and also the exchange platform. And we can do local products there and make funds flow and employ people.
All right, Rome. Very quickly now, this big move, the expectation for Bitcoin price, where do you see it going?
Okay, my heart is fixed on we're going to see worst case scenario $80,000 for the end of the year, or worst case scenario first quarter of next year, maybe January, February, because all Bitcoin is for now. In fact, most of the big cryptocurrencies now, they are actually undervalued. I mean, a lot of things are going on, but the price are not going up. They're not moving very fast with all of the fundamentally. There are a lot of things that are going on. So we don't expect the price to just shoot up that way. We have to get momentum. We have to gather momentum. You and I getting involved, having the knowledge, which is most important for it to be able to take the other.
All right, Rumi. Thank you so much. We'll keep watching that price. Thank you so much, Rumi.
80,000.
That's a big number. That's a big number.
Well, I don't know. This market, I mean, the more you look, the less you see. So we really don't know. All right. That's a wrap on the program. Thank you for watching. And don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. I'm Chimezie Obi Iwago.
And I'm Ladi Williams. Thank you for watching.